Hi, Paul Gerard from Price Accounting Services, and welcome back for another brief video dealing with audit issues concerning capital gains. Now, the ATO has become quite good at collecting and gathering data on share, property, and all sorts of other ways for capital gains to be underreported or omitted. Let me explain. We commonly have a case where somebody might sell their own home. Husband and wife sell their home, buy another. You would argue, no CGT, don't have to worry about it. However, that is not the case. It's essential that capital gain be at least reported and might be fully exempt with a $0 CGT event and showing, yes, there is a capital gain during the year, yes, I have claimed the exemption for the main residence. That is how the returns must be prepared. We're finding that the ATO are now auditing people, and we must have had half a dozen people last year who hadn't told us about the sale of their home, where we did need to go back and correct that and relodge. So that's extra time, and regretfully, it's extra cost. We can't do it for nothing. It does take up a bit of time. It's not particularly onerous, but it still has to be done. The other area where CGT issues are being commonly omitted is crypto. So we have a simple solution to this. If you have been buying or selling crypto, use a Coinly report. Provide that to us. It's a very low cost way, and we understand that the ATO also use Coinly to help it calculate what your crypto position has for tax purposes. So it makes sense to then provide us with that same info. Even if it's just a tiny loss, we have to show something. We can't just show nothing. Because if they calculate you sold something, they don't necessarily know or consider it's complete. But if you report it, they say, tick, it's been reported. The other area where we see errors in CGT reporting, property sales, failure to keep correct cost-based records and things like that. So we often recommend a pre-estimate for CGT because sometimes the difference between a taxpayer and our calculations can be very materially different, both higher and lower. So it's not always the same outcome where, wow, I need to pay more tax. In many cases, we actually find taxpayers are astounded by the tax savings we can identify when we just spend a few minutes talking through your position, arming you with the information so that you provide us with the correct info. So CGT estimate, we highly value it. What we do is we get you to send us your estimated selling price, estimated selling costs, etc. We'll walk through and discuss the specifics of your property ownership and how it's been used and owned and things like that. So if anything needs to be done to minimise your tax, we identify it and tell you what we need. Okay? Then we calculate that, and when we share it back to you, it's in a format where all it takes is some modifications to the actual selling price, the actual selling costs, etc. So it minimises the work enormously. Yes, it does come with an additional upfront cost, but it arms you with the knowledge of how much tax I've got to withhold when I do sell it, so that when I get my tax bill later on, it's covered. Or what are the strategies we can use to offset that tax payable, perhaps even to get higher deductions elsewhere to offset that, so save some money. All right, so hope that helps guide CGT reporting and how we may need additional information and why we need the additional information. So I hope that helps. And if you've got any questions, contact us, office number or email, anytime you like, and we're happy to guide you and steer you in the right path. Okay, till then, till another video, bye.